Most investors don't lose money because of bad markets. They lose money because of bad decisions. In fact, one simple investing mistake could cost you hundreds of thousands, maybe even millions over time. Think about it. What if you saved and invested for 20 years only to realize you did it all wrong? It happens every single day. People make critical investing mistakes without even knowing it until it's too late. But today that changes. And by the end of this video, you'll know exactly how to build wealth the right way without falling into the traps that destroy most investors. Let's get started. The first and most common mistake, trying to time the market. It sounds smart. Buy low, sell high, right? But here's the harsh truth. Even professional investors fail at predicting market moves consistently. Most people panic when the market drops and sell at the worst possible time, then wait too long to get back in, missing the biggest gains. Let me show you why this is a disaster. Imagine you invested $10,000 in the S&P 500 in the year 2000. If you simply left it alone, by 2023 it would be worth over $65,000. But if you tried to time the market and missed just the 10 best days, your returns would be cut in half. Missing the best days in the market is one of the fastest ways to destroy your long-term wealth. Instead of trying to time the market, focus on consistent investing, whether the market is up or down. This strategy, called dollar cost averaging, lets you take advantage of long-term growth without the stress of trying to predict the future. The second biggest investing mistake? Investing without a real strategy, just chasing trends and hype. Here's how it happens. A new stock or crypto skyrockets and suddenly, everyone is talking about it. You see people making huge gains, so you FOMO in, hoping to catch the next big wave. But by the time most people jump in, it's already too late. The hype dies down, the price crashes, and now you're stuck holding an investment that's worth a fraction of what you paid. This is exactly what happened with the dot-com bubble in the early 2000s, and again with meme stocks and speculative crypto in recent years. Millions of people lost money simply because they invested based on hype, not a solid strategy. The fix. Instead of gambling on the latest trend, focus on proven investment strategies. Build a diversified portfolio with assets that have a strong track record, like index funds, blue-chip stocks, or real estate. Investing should be based on long-term growth, not short-term excitement. The third biggest investing mistake? Ignoring inflation and not investing enough to outpace it. You might think keeping your money in a savings account is safe, but here's the harsh truth. Every year, inflation quietly eats away at your purchasing power. Let me give you an example. If you had $10,000 in cash back in the year 2000, that money could buy a decent used car. Fast forward to today, and that same $10,000 barely covers a few months of rent in most cities. Why? Because of inflation. And here's what most people get wrong. Saving money alone isn't enough. If your investments don't grow faster than inflation, you're actually losing money in the long run. The fix! Instead of just saving, make sure your money is working for you. Invest in assets that historically beat inflation, like stocks, real estate, and businesses. Even if you start small, the key is consistency. The earlier you start, the easier it is to stay ahead of inflation and grow your wealth. Imagine this. You see the stock market dropping and panic sets in. You sell everything to avoid losses. Then the market recovers and you realize you sold at the worst possible time. Sound familiar? This is one of the biggest mistakes investors make, letting emotions dictate their decisions. Fear and greed are the two emotions that destroy investment returns. When markets crash, fear makes people sell at a loss. When markets soar, greed makes them chase overpriced assets. Either way, emotional investing leads to bad decisions and lost opportunities. But the wealthy don't invest based on emotions. They follow a strategy. They stick to their plan whether the market is up or down, and that's exactly what you should do too. The fix. The best way to remove emotions from investing: have a clear, long-term plan. Set automatic investments so you don't make impulsive decisions. Diversify your portfolio so you're not overexposed to one asset. Follow a strategy, like index investing or dollar cost averaging, so market swings don't shake your confidence. Because when you invest with discipline, not emotions, you give your money the best chance to grow over time. You've probably heard the advice, don't put all your eggs in one basket. And while diversification is crucial, there's such a thing as overdoing it. Some investors think that spreading their money across too many stocks, funds, or asset classes will protect them. But in reality, over-diversification can actually hurt your returns and make it harder to build wealth. Here's why. When you own too many investments, you start diluting your gains. Instead of letting your best assets grow your wealth, your money gets spread so thin that even great investments won't make much of a difference. And managing a portfolio with dozens of different stocks or funds, that's exhausting. Keeping track of performance, news, and rebalancing becomes a full-time job. So what do smart investors do? They focus on quality over quantity. Instead of buying 50 different stocks, they choose a handful of strong, well-researched investments. Here's a better approach. Stick to a focused portfolio of high-quality investments. Invest in broad index funds if you want diversification without complexity. Rebalance occasionally, but don't chase every hot stock or trend. Remember, having a few great investments is better than owning a bunch of mediocre ones. So instead of trying to own everything, focus on owning the right things. By now, you've seen some of the biggest investing mistakes that cost people thousands, sometimes even millions of dollars over their lifetime. But here's the good news. You don't have to make these mistakes. Imagine where you could be 5, 10, or 20 years from now if you simply avoided these common traps and invested the right way. Instead of chasing quick profits or making emotional decisions, you'd be steadily building real, long-term wealth. Let's recap the key takeaways. Invest for the long term. Stop chasing quick wins. Control your emotions. Fear and greed destroy portfolios. Ignore the hype. Focus on fundamentals, not market noise. Stick to your strategy. Time in the market beats timing the market. Focus your investments. Quality over quantity. Most people never learn these lessons, and that's why so many struggle financially. But now, you have an advantage. You know what not to do. And by avoiding these mistakes, you're already ahead of 90% of investors. The question is, will you take action, or will you keep making the same mistakes? The choice is yours. So let's quickly recap the 3 biggest investing mistakes that hold most people back. Trying to time the market, jumping in and out instead of staying invested, investing without a plan, random investments without clear goals or strategy, ignoring inflation and not investing enough, keeping too much cash instead of letting money grow. If you only take one thing from this video, let it be this. Avoid these mistakes and your wealth will grow automatically. You don't need to be a genius to build wealth. You just need to follow the right principles and stay consistent. Most people underestimate what small, smart moves today can do for their financial future. But the truth is, even small, consistent investments can turn into massive wealth over time. That's the power of investing the right way. The difference between those who struggle and those who thrive financially isn't luck. It's knowledge and action. You now have the knowledge. Will you take action? And if you're serious about building wealth, I've got something that will help you even more. Stick around for the next video, where I'll show you how to start investing, even if you have no experience or a small budget. We've covered the biggest investing mistakes that keep people from building wealth. Now I want to hear from you. Which of these mistakes have you made before? Comment below. I read every response. And if you're serious about growing your money the right way, you need to watch my video on the harsh truth about money. Most people ignore this. It reveals the biggest financial traps keeping people broke and how to escape them. Watch it here. Also, if you found this valuable, hit that like button, subscribe, and turn on notifications so you never miss an investing tip that could change your financial future. Thanks for watching. See you in the next video.